Hi, Harry here on May 5th, Friday for the Rant. And again, I'm sure you know by now that this is an important time. The market had that first major crash, okay, 38% on the NASDAQ, 28% on the S&P 500. That's what I needed to know to say we finally put in a long-term top. I mean, very, very high chance now, okay? And we've had this bounce, and the first bounce, and after the 29 crash, the first bounce after the first wave only down took about 5 months. Well, we're going into this 6 months, okay? The market's really bottomed on typically, it was between September and late December, but early October was really the classic overall bottom for the markets. So we've gone sideways and we should be about to roll over and go into the next major wave down. And I spell this out in more complexity for subscribers in the newsletter, but this is where we're at. So what I'm focusing on is called a triangle pattern. Okay, we've got lower highs, since late last year, and higher lows, and that's coming to a point where, okay, if we break, and the key number right here, about 1710 on the Russell 2000, that means we're breaking through this triangle pattern, and the next target down would be about 1320. So that would be a second confirmation that we've seen a major long-term top, and more importantly, a confirmation that we're heading into the larger third wave down clearly. And that usually is the longest and hardest wave, and that's the most decisive wave, okay? So 1320 is that first target if we break around 1710 near term, or 1720 we go out a little farther. So that's the key thing. Again, I'd love to see it bounce to 1970, almost 1990, the top of this triangle, but in the last move of such an obvious pattern, the markets tend to peak ahead of time and turn around. And this time it looks like they don't even have the strength to go up towards the top of the channel in this final E wave. And again, we're also seeing the NASDAQ is underperforming the S&P 500 in this bounce, okay? And we shouldn't see that either if we're just in a major correction and about to head back to all-time highs again. So again, I'm clear right now, unless something really strong happens, we're not going to see new highs. The markets are really going to get in technical trouble if they break much down from here, 1710 or so. And remember, okay, so just go to down to 1320 on the Russell 2000, okay? I mean, we're talking about the markets now being down over 50%. And ultimately, my targets, if we see the crash of a lifetime and we're able to see the markets take back over from the central banks, then I'm looking for as much as 86% down by mid to late 2024 on the S&P 500, 92% on the NASDAQ, and something like 91% on the Russell 2000. So again, critical point here, be watching the markets. I'm particularly going to be watching the Russell 2000, and I'll give you an update when I think, okay, we're confirming that we're breaking through this critical area and the markets are going to head down hard and fast again. So don't tally on this one. For people who have not fully sold out, which most people should be in stocks, this is your last chance. Love to have gotten a bigger bounce. I wouldn't even bet on that right now. I would be getting out of stocks, and then as soon as we have this break, the action starting, and then we do nothing but look for further downside of the market, and ultimately we look for the buy opportunity of a lifetime, again, likely between about July 2024 and October. That's my best guess now. So again, keep you updated.